Welcome, everyone. I'm Mike Mershazadeh.
And I'm Ashley Ward.
And you're listening to the What Matters podcast, and our mission
to spotlight top RIAs, wealth managers, and investment professionals who are redefining wealth management.
Join us as we dive into their journey, strategies, and insights.
Whether you're an investor or an inspiring pro, this is for you.
Get ready for impactful conversations on the What Matters podcast. Welcome to another exciting episode of the What Matters podcast, where we delve into stories and insights of remarkable individuals in the wealth management. I'm Mike Mershazadeh, and joining us today is our special guest, Michael Schwartz, the founder and CEO of Magnus. Michael is a renowned wealth management advisor and has recognized numerous times in the financial services industry. Most recently, Michael was named to the 2023 Forbes Shook Research's top financial security professional list for the second year and the fourth year in a row to the Forbes Shook. Welcome, Michael. Thank you for taking the time with us today.
Very nice to be here, Mike. Very nice to be here, Ashley. Thank you for having me.
Michael, I'm going to have Ashley get into our first question here. One question I had, Shook, I'm unfamiliar with it. I've done a little research on it, but can you tell me exactly how you were able to, get in that category with them?
Sure. Well, I believe Shook, which is a Forbes-based criteria and award system, looks at a book of business that is, broadly speaking, it's not just in the asset management, it's in the risk management as well. So they're looking at a true practice in the retail financial services world, as opposed to most awards that just look at how big someone's book of business is.
Very cool. Well, we're excited to dive into your wealth of knowledge today, Michael. To kick things off, let's start with your journey. So you began your career in finance over 20 years ago. Could you share with us a little bit more about your early experiences and what led you to establish your own wealth management firm and becoming the founder and CEO of Magnus Financial Group?
Absolutely. So I started in the business in the late 90s. And that was a moment in time that there was this massive shift and seismic shift in the retail financial services industry. Whereas before the Glass-Steagall Act was repealed in the mid-90s, each section and vertical of the financial services industry did their own type of planning, meaning banking did banking, brokerage did brokerage, insurance did insurance. When we walked into a bank 35, 40 years ago, they only wanted your deposits. They weren't asking you to open a Roth IRA. So the timing of when I started in the business, I think, is critically important to where I am today. And when I started at Northwestern Mutual back in the late 90s, I was the first breed of their new wave of advisors. And in fact, my card when I first started said I was an agent, as in they branded themselves as the Northwestern Mutual Life Insurance Company. And then once you got your securities license, they called you a special agent. So for the first year in the business, I would hand out business cards to friends and it would say special agent. And my friends would be like, dude, you're in the FBI? What are you doing? And I'm like, no, I'm not. And it was right around the turn of the century in 2000 that Northwestern Mutual branded themselves or rebranded themselves the Northwestern Mutual Financial Network. Now, from the beginning stages, I was passionate and extremely interested in the asset management as well. And we saw there was this evolution where clients were looking for a one-stop shop, meaning that having 5 different people on your financial team where one person did the investments, another person did the financial planning, a third person did the investment planning, a fourth person provided estate planning, right? There was this migration occurring in the seismic shift under our feet, and we utilized that change to create a partnership within the Northwestern Mutual distribution system. So from an early stage in my career, even before it was called the wealth management industry, we were trying to provide wealth management to clients. And so in 2003, I started a partnership at Northwestern with a few other financial professionals to create an economies of scale approach. And by 2017, right, we were at a point where we were north of $1 billion in assets. We had probably $6 billion of in-force insurance on the books. And at that point, I was fortunate enough to be recognized in the Financial Times as one of the top 400 advisors in the country. And it became apparent to me that if I wanted to maintain relevance and true growth in a shoulder-to-shoulder capacity with clients, I needed to lift out from the broker-dealer universe or independent BD world and go to the RIA space. So in 2017, I started and founded Magnus with an effort to create a wealth management firm with clients operating as a fiduciary with clients.
Very
Wow.
interesting.
So was that a spinoff from the previous company, or were you still using them as like a custodial? If you don't mind me asking.
No, it was a breakaway. So Northwestern used Pershing to clear for assets. When we lifted out, we chose Charles Schwab as the original custodian to warehouse and hold client assets. But it was a brand new entity with nothing that was similar from a regulatory and compliance side. Whereas we are set up as a fee only RIA, we do not have a broker dealer affiliation.
Gotcha. So let me ask you this: in building any successful venture, comes with a share of lessons. Can you share, some specific lessons you've learned as an entrepreneur in wealth management that are particularly valuable in what you're doing today?
Absolutely, Mike. Number one, it's okay to say no to people. You can't please everybody. So saying no sometimes is a good thing. Meaning you can't be all things to all people, right? And it's important that you, as a owner and operator, establish boundaries and create and manage expectations with not only clients but also your team. And the other thing that I'll share with everyone is that it cost a heck of a lot more than we anticipated to get the organization off the ground.
Yeah.
There are a lot more expenses when you are running your own firm, and you don't really realize that until you actually are funding the bill.
Right. And have you encountered any significant challenges while building and growing your RIA?
Yeah, that we have, and that's a great question. The first challenge and obstacle was that we grew a little bit too fast, too quick. So when we launched, the goal was to build a firm around my book of business, and in short order, we found that we had a number of advisors that wanted to come onto the Magnus brand, whereby we were growing inorganically. And we added 5 advisors within about 3 to 4 months of each other in late 2018, early 2019. And that growth inorganically created a number of obstacles in terms of how to provide value for the additional advisors that were working within the organization on a whole host of matters.
Right. When you say you're building the RA around your book of business, do you mind me asking what that number was, what your AUM was initially?
Sure. Yeah. So originally I was around 450 million when I was at my old firm, but that included brokerage business as well. And so when we made the move and I brought the book of business over, not everything ported over because it wasn't all fee based. Some of it was brokerage. So when we settled, it was around 320 to 330 million when we first started billing at Magnus.
Gotcha. Thank you.
You're welcome.
Wonderful. And so Magnus, I mean, you have achieved notable recognition and success. Could you dive a little deeper into some of the strategies and key decisions or unique approaches that you believe have been instrumental in your firm's rise to prominence?
Absolutely. Now, we define growth in 2 different ways in verticals. One is organic growth, and the other is inorganic growth. Organic growth is adding new clients and assets to the platform. Inorganic growth is adding new advisors. And we have created a repeatable and scalable process to grow on an organic basis. So every advisor that's joined our firm has doubled their book of business in 24 months. And I
Wow.
believe that comes from the resources that we provide at the organization. And I'm a big believer that you need to, it's not an expense problem, it's a revenue problem. Meaning, if you wait too long to build the infrastructure and capacity around yourself as a retail advisor, by the time you actually do start adding staff and growing bodies and headcount, you are already behind the eight ball. So we've created at Magnus different departments. So we have a investment operations division, we have a research and trading department, we have a financial planning division, we have an insurance department, we have an in-house general counsel and CCO, we have a marketing officer and new business development officer. So we provide all of the advisors, including myself, the ability to spend the majority of their time prospecting and meeting with clients. Now, a little bit further on the organic component of things, Ashley, when you under promise and over deliver with a client experience is when you can grow your firm exponentially and your client base. So when advisors ask me, how do you get referrals? I say they're not referrals, they're endorsements. I don't want a referral, I want an endorsement. An endorsement is I don't make a phone call, someone calls me up based upon the relationship I had with the nominator. So I get around 15 call-ins a month where someone will reach out to me and say, I heard you did a fantastic job with one of my friends, one of my colleagues. I'd like to schedule an appointment. Are you taking on new clients? I haven't made a phone call in literally 15 years. So understanding that client process and how to deliver not only in conversation, but in execution, a multi-year disciplined wealth management strategy, I believe enhances the client experience, which then leads to the organic growth, which then leads to everything I just spoke about.
Absolutely.
So I got something to ask on that. When you say your advisors are doubling their books within 24 months, how many total advisors do you have, let's say, besides yourself, obviously?
There are 9 advisors, including myself.
Wow. That's impressive. And when you say that you're getting a call, like 15 calls a month, is that for the whole firm or is that just you personally?
That's just me personally.
Wow. Oh, that's impressive.
Yeah, congratulations.
Yeah.
And so in a
Thank you.
competitive landscape, how do you manage to differentiate your firm and create a unique value proposition to resonate with your clients versus other firms out there?
So I think one, it starts with operating in a consultative approach with clients in terms of listening to them and taking them through a process and not having a set agenda and a one size fits all product, but having a process. That's number one. Number two, it's having the ability to take clients through a wealth management experience and process. The feedback I get when I take a new client through an initial process is, this is fantastic. I've never been through this before. I've always wanted to do this. And it's interesting, right? You may think, oh, someone has all this money. They are this ultra high net worth client. They don't need this type of planning. The reality is that everybody needs
Oh yeah.
this type of planning. And the larger someone's balance sheet and asset base is, the more that we can assist them with.
Yeah,
absolutely.
Yeah, it's funny because individuals think just because the person's capable of making money, they're capable of managing it and capable of investing it. I could tell you, for somebody like myself, I've made money my entire life. I am horrible at managing my money. I am horrible at investing it, I value having an advisor, I think you nailed it.
Yeah, absolutely. And the reality is that even if you were good at it, someone who is an owner and operator in any business, they're
Sure.
really good at what they do, which typically leads to not have the time to spend to provide the true oversight that a multi-year strategy requires.
Right. I totally agree with that.
And that's really important, just to spend a minute on that, because when I'm communicating a message to a client, I'm explaining the amount of time that goes into creating this discipline. And it's not just security research. It's not just tax loss harvesting. And when you can frame the deliverable to a client, which is the actual amount of time that goes into maintaining this type of relationship, it changes the dynamic of how the client is looking at you, where you're not just another advisor who's looking to collect assets and charge a fee and beat a benchmark, whatever that benchmark might be. You're creating accountability to a client based upon a bespoke approach to managing their overall financial situation.
Right. Right. And I have a question to that. When and this kind of goes back to what we were talking about before. And the 9 advisors that you have, right? Did you recruit these guys like fresh out of college, or did you recruit them from wirehouses? How did you augment your growth there?
Yeah, so a number of them came from my old firm, Northwestern Mutual. A few came from the independent space, and a few came from the wirehouse universe. So a hodgepodge of diversification.
Gotcha.
Okay. And this is more of a question for you versus your firm, but how do you measure success as a financial advisor?
It's a great question. I define success as wearing my hat as an advisor based upon achieving annual goals that I define on not only net new assets, but new financial planning, relationships, and households. I break up those goals into bite sized increments. So I have basically daily goals that I look to achieve. And by focusing on those daily goals allows me to hit my weekly goals, and then monthly, then quarterly, then annually.
That's a great point.
I like that. Yeah, I'm somebody that writes my goals down at the beginning of every week. I have this little thing right here, and I transfer this small whiteboard to my big whiteboard, and then into my Franklin Covey planner. And by the time I've written it down 3 times, it's in my head, right? So I really like what you said there.
I remember hearing this back, I don't know if it was in college or even in high school, that there was a study done at the Ivy League level that people who write down their goals have a higher chance of achieving
Yep.
them. And that
Right.
always resonated with me. And I always write everything down. I have it on the little yellow sticky pad, right? Right in front of me. I have it on the biweekly goal. So it's all over the place. Yeah.
Right.
So, obviously, as someone who has been recognized, for top level performance, can you share, obviously, maybe some leadership lessons you picked up over the years, especially from your time at Northwestern Mutual in the Park Avenue office? Was that in New York, by the way?
It was, yes. Yeah.
Was that right by Central Park? Where was it?
It was in Midtown, a block north of Grand Central.
Okay. And how these lessons influence your approach to leading Magnus?
Yeah, so what's interesting and unique about the distribution system at Northwestern is that everybody's self-employed. So from the time I was 22 years old when I started at Northwestern, I never had a salary. I ate what I killed. And so there was this natural understanding that nobody was going to pay me a salary. I had to go out and be a self-starter. But what I learned is that the independence that this firm creates could be both a good thing and a bad thing. And the key when you are in business for yourself, when you have that independence, is to focus on your day and control the day, not let the day control you. So my experience being self-employed as a statutory employee for nearly 20 years at Northwestern, I think paved the way for me to really appreciate the ebbs and flows of running your own firm and the true and the difficulty, the highs and the lows, and to never let the lows get too low and the highs get too high.
Gotcha. Thank you. And what do you consider as in starting your own firm? Obviously, I've been there several times. And have you ever had anybody that has came and worked with you challenge you, maybe trying to go open up their own thing and take some of your talent with them?
So we have had a few advisors that have started their own firm, but they did not. There was no attacking client base or or my clientele. But there was the situation where we had a number of advisors after the pandemic hit that realized or believed that they didn't necessarily need an office and a culture because of the new found
Let's work
feeling
from home.
of
Yeah.
Mhm.
working remotely, but we've never had anyone go after clients.
Gotcha.
Yeah,
Thank you.
so
You're
let's
welcome.
go into the future of wealth management. So, Michael, with your extensive experience, you must have some insights into what you believe for the future of wealth management. Are there any trends or technologies or strategies that you believe will significantly shape the industry in the coming years?
Yes, I do believe that there is. I think the industry has, over the last 5 to 10 years, was under some fee compression. So there has been a natural downtrend in what firms and advisors are charging. I think the prospectively anyway, the technology that provides integration for clients, not just at the account level, but the balance sheet level, I think will catapult and thrust firms and or new vendors into a new market share environment. And for instance, it doesn't appear, I should say, the risk management and the insurance part of the financial planning, which integrates and threads the needle to the estate side, which then connects to the tax side, has been effectively a standalone tech stack relative to what clients have been used to on the integration and aggregation planning. And that the unlocking of integrating both the risk management and the wealth management, collecting or connecting with an estate plan and income tax deliverable, I believe, is the next wave to create market share.
Valuable insight there. And what do you vision for the future of Magnus? Do you have any plans for further expansion or new initiatives, or do you plan to just continue with your organic growth strategy?
So we are still in full growth mode at Magnus, both organically and inorganically. Last year, we added 452 million of net new assets to the platform.
Wow.
This year, our hope is to be right around that same threshold, and we are still looking to grow inorganically. So I'm a big advocate of pushing forward for growth, and however that growth initiative could be defined, whether there's strategic maneuvering at the corporate level, additional growth under vertical of organic versus inorganic, we will continue to push that ahead in either which direction.
That's wonderful.
Gotcha.
So 400 something million grew just last year. Do you mind me asking what your total assets now is? Something in the billions?
We're about 1.6 billion right now
That's great growth. And
of all AUM.
yeah, I mean, considering starting in 2017, that's amazing. Congratulations.
Thank you.
And so I had a curious question there. Obviously, your guys' business model is more lucrative and different from other individuals that we've interviewed on this. And let me ask you this: how do you see artificial intelligence? Do you see it enhancing the client experience? Do you see it impacting the wealth management space? Any AI driven innovations that you're excited about or that have already been implemented? Talk to us about that.
Yeah, I think we've just scratched the surface what artificial intelligence is going to add to the wealth management industry. And I think it's going to create a the retail investor to want to do more themselves, similar to the advent of the internet in the late 90s and the growth of online trading and the retail platforms that are out there, whether it be E-Trade, TD Ameritrade, Scottrade. I suspect that that'll be a similar wave that the investor will try to do some things themselves with additional AI overlays into a portfolio. I also feel that there's going to be a ongoing enhancement to the relationship that we can provide integrating AI. So I believe that we need to embrace that and be open for change, because if you are not adapting and evolving with the current environment, you are at a disadvantage at the entity level. So I am constantly trying to research, understand new products, new technology to stay in the know so that we are not left behind under any type of growth initiatives.
Wow, gotcha
Yeah,
there.
and there's so much out there too. It's hard. It's like every day there's something new. It's hard to keep up with it all.
It's every single week there's something new. That's right. Yeah.
So shifting gears a bit, could you shed some light on investments in sectors that you find particularly exciting right now or that hold potential for the next wave of wealth creation?
Yeah. So I'm going to answer that not with a specific asset class, but rather a specific approach to generating and creating wealth. And I believe that it's about creating, I believe that fees play a huge role in long term wealth creation. So maintaining low fees are critically important. I believe that tax planning is also critically important.
I like
So instead of look to me, it's not about, okay, large value is the asset class from a valuation basis and then EM is second, but rather looking at it where am I buying certain asset classes based upon how it's taxed, based upon the composition, whether it's a 40 Act fund, an ETF, or an individual security, creating a discipline that connects all areas within the tax component is where a good advisor can become a great advisor and can add a few hundred basis points a year. When I'm talking to a client, I'm talking about my objective is to get additional return without taking the equity risk premium of the stock market. And there are a number of initiatives that we overlay into a wealth management strategy and financial plan that allows us to accomplish that, which we can quantify for clients, such as an asset location policy. Where are we buying certain asset classes based upon how it's taxed? A ongoing tax loss harvesting approach, trying to generate losses on a short-term basis and compound that on a multi-year approach. Ongoing rebalancing, maintaining a discipline under an investment policy statement, creating a cash flow pro forma and a hurdle rate that a client needs to get on their balance sheet to achieve financial independence, so that when we customize an investment policy statement, there is an integration between the return that the client needs to get and the actual design of the portfolio, whereby we are increasing the likelihood of a desired outcome. So the point being, Ashley, is having a conversation with a client about these type of initiatives changes the approach on how clients look to you and manages client expectations from the beginning, so that you are not renting dollars from a client, that you are
Right.
creating a relationship that is not just with the current patriarch and matriarch, but is G2 and G3 over time.
Thank you. I like that. And let me ask you this as a final question we have on today's podcast. This is one I always get different answers on. So if it's not something you feel comfortable answering please feel free to let us know. As an expert in finance, we'd love to hear your insights on the economic outlook. I mean, obviously with the debt that, America's debt, the rising interest rates, are you seeing obviously more people going into fixed income and less into equities? What can our listeners expect in the near term, long term, and how can they make informed financial decisions based on your expertise?
That's a great question, Mike. So the first thing I'll share with you is that for the first time in nearly 20 years, there is an opportunity to make money in short-term cash instruments. Not only do we have an inverted yield curve, where I can get a client a better yield on a 7-month treasury bill than a 30-year bond.
Oh, crazy, huh?
It's insane. But the Fed is also coming off 9 or 10 rate hikes, right? So this is the first time in nearly 20 years that clients can get a return on their assets in short-dated fixed income instruments. I've seen there's been a trend of smart money flowing towards the credit markets and the fixed income markets. Regarding the outlook of the equity risk assets globally, I would respond by saying it doesn't make a difference. Because if you're investing short-term money, money that's for the next 6 months or 12 months into risk assets, that's incongruent statement number one. And number two, you shouldn't do that. So I would first say clients need to make sure that they have an adequate amount of money in cash reserves as a cushion that satisfies an emergency fund. Typically, it's 6 months to 9 months in the bank as a cushion. Second, they should identify if any money that they have is going to be needed for a purchase over the next 12 to 60 months. So basically the 1 to 5 year bucket of money. And then any money that they have that's 5-year plus, we would call a wealth strategy. So to have an appropriate strategy for the bucket of money removes the question of what's going to happen. A good firm, if you looked and polled the top firms out there, they typically have a very similar capital market assumption breakdown. Meaning, if you went to Goldman, Morgan Stanley, all the top RIAs and said, how much money do you have in small cap versus mid cap versus real estate versus large value, it's going to be very close to each other. So that's the key, is clients need to know that they're with a firm that understands that. But when you then take it to the next level and you then create this wealth management strategy running concurrent to their investment planning, is the key that clients need to focus on.
Thank you. I appreciate
Very
that.
informative.
You're welcome.
Well, Michael, it's been an absolute pleasure having you on the show today, and it's been a privilege to hear your journey and your insights tailored to your impressive background. It was very educational, so thank you so much. And to our listeners, thanks for tuning in to another episode of the What Matters podcast.